All right. What's going on, guys? I hope you're having an awesome morning. I am. I'm really excited. This is going to be another cool video. I'm going to explain what we're going to cover here, kind of, summarize the main points, what this video is going to talk about. Then it's going to cut to a clip from the stream where you could see I call out when I buy this, and then it's going to fast forward to when I sold it. And there's a bunch of many cool lessons with this. One, as always, it is a weekly option. And go watch the last video I did with NVIDIA. It was like $60 to 600. And I really stressed the importance of understanding the viability of trading these. These are very risky. These are gambling. That's why we're putting small amounts, but that's why it makes sense, makes sense with the context here, how to make money fast with trading options. You do go to the shorter duration. That's something I wanted to talk about for some people. And I'm going to go over this strategy, but the biggest part that differentiates, I think the clip, in my opinion, is more boring because I call it out after, and it's not like I call it out within a minute or two after I buy it, but we were doing something on the stream. And this is why, too, you guys go check out the stream. The clip I'm getting this from, it's on my YouTube. You could watch the whole 7-hour trading day. We're going to be there Monday, so you could come and watch this live, and that is the benefit. Some people are like, I don't see Amazon on your screen when you're doing it, but you could go pull up these option chains. I know people, they just listen to what I say. They take the strike prices and they watch the volume, and you see me buying it. It's not like, when I'm calling these out, whether it's on the screen or not, me just saying what contract it is, like these words at 10:21 a.m., that would have made you 1,000%. So and that's where I want you guys to learn, and that's why I say it's not about just, you should learn how to be able to listen, pick up, even on that level. That's basic to just hear me, but it does create a more better trader than someone just following an alert or something like that. So that is one aspect of it. Now, it's the big part, though, like I'm saying, this is, come to the stream. This is risky. You got to understand it. But now the next part is what we were doing during the stream. We were watching the Fed chair speech. And this is different from the NVIDIA play in that it was a catalyst. It was a really big catalyst. And like NVIDIA, in the key with these weekly options, the key with making money fast with options is getting a cheap contract, a low premium, hence here 43 cents. And I'll show you when we sold it. But then the next part of it is, you want to get blanket. You want to get near the money, but then or the price. But then the next part is, you want to get in the money, and then what is the cause of it? What would be the reason? NVIDIA, the market was just very volatile. It was low. It was responding with Apple, and there was other stuff. That's why we were able to make that play. But in this case, it was a pure catalyst. It was close to the money, but then it was the news. It was literally, I did this as the news. The minute we were having the Fed speech up, I kept him on the YouTube, and then I made the trade on my other thing. That's exactly what I was doing. I was listening to him, interpreting it, and understanding how he could move the markets, and understanding looking for the exact stuff to be said. And we were doing that live, and then spotting the opportunity within the options. These were cheap. I did 40 bucks both ways. It was $80. And then I'm going to show you as it went up. You could even hear me on live. It went up to like $7. I didn't sell it. And then it came down, and then I panicked. I sold out at 580, and then it shot back up to 800, and then it eventually expired worthless. But when it was up, I did acquire a put for another 100. So at the end of the day, I really only made probably about 150 bucks, 200 bucks net profit. So I got all my money back and then added on to it. But using the strategy of hedging it and taking advantage of the volatility, or even protecting myself, I put out more money. And that's something we're going to talk about, because even seeing those mistakes, seeing when it was good to average, protect, lock in, or just sell your profits, that could save you extra couple percentage points on your account, which will help. But at the end of the day, too, these are daily options, and these were risky. So the next big part was how why did we hold, and why did we sell, and do all that. So I'm going to give you guys the clip. Watch that. You'll see it, and we'll get into all this.
It's a good year for the United States economy. And most of the hard data that we see coming in remain quite solid and suggest ongoing momentum heading into 2019. You mentioned this morning's jobs report. For those of you who haven't seen it, we had 312,000 payroll jobs added, a very strong number.
Here's the first mention.
We have unemployment remaining below 4% for 9 months now, the longest period since the mid-1960s. We have labor force participation picking up again and surprising to the upside, which is very, very welcome. And finally, we have wages, which are continuing to gradually move up. Average hourly earnings moved up, and that's quite welcome. And also, for me at this time, does not raise concerns about too high inflation. So very strong report today. We've also seen
his report right there.
Forward-looking basis, we've seen initial claims for unemployment insurance.
Yeah, you exactly. You want to see a policy mistake
near their historic lows, and so that's more of a leading indicator, and we still see real strength there.
He says inflation.
Consumer spending has been strong right through December. The reports we're getting from the retail
let's see. Watch as the market. I have it on the other screen
right through the holiday season,
so you guys can see. But he's saying it's strong. It's good.
I would say those are all good data points. There is yesterday's Institute for Supply Management report, which came in
ISM.
well below
He's
expectations.
talking about the ISM right now.
I would just provide a little bit of context there. The ISM report is a survey of manufacturing conditions, and it had been at historically high levels, in fact, higher than it had been even in the strong expansion of the late 1990s, and much higher than it had been during much of this expansion. So it's now at a level which is considered consistent with ongoing moderate growth.
So he's saying ISM was just really high. That's what he said about inflation that the market's going to like, with the interest rate.
That's a little bit of context. I would say
this guy's old.
The fact that it moved down so much in 1 month is something.
The market's taking a move from there. Because again, that's something he signaled last time. I don't know if that's why the market's moving, but keep watching.
Seem to be on
but
track
that is overall very. Again, that's the same approach Powell took that investors
China
didn't
for a
like.
second. China's been a big part of the story, and the most recent data from China have been more mixed. China's consumers appear to be pulling back, as seen in the Apple News and in the weak retail sales data. The 2 PMI reports we got earlier this week show softening in domestic and external demand, and this weakness seems to be spilling over to other emerging Asian economies and to global commodity prices such as copper, for which China is such a big buyer. That said, Chinese authorities are responding with additional stimulus, and China and the rest of emerging Asia should continue to expand at a still solid pace this year. So overall, I would say the picture for the rest of the world remains consistent with continued growth here in the United States. So
he just admitted China is putting stimulus. China's bad.
But financial markets have been sending different signals of concern about downside risks, about slowing global growth, particularly related to China, about ongoing trade negotiations, about what maybe let's call general policy uncertainty coming out of Washington, and among other factors. So, you do have this difference between, on the one hand, strong data and some tension between financial markets that are signaling concern and downside risks.
So you're literally talking about what we are saying right now.
Contrasting sets of factors.
Hey, Tiago, let's go.
About monetary policy going forward.
Everybody tag the trading.
Now, when we get conflicting signals, as is not infrequently the case, policy is very much about risk management, and I'll offer a couple of thoughts on that to wrap up. First, as always, there is no preset path for policy. And particularly with the muted inflation readings that we've seen coming in, we will be patient as we watch to see how the economy evolves. But we're always prepared to shift the stance of policy and to shift it significantly if necessary in order to promote our statutory goals of maximum employment and stable prices.
That's funny.
And I'd actually like to point to a recent example when the committee did just that in early 2016. I mentioned this in this December press conference in passing. As many of you will recall,
the market's bouncing now.
December 2015,
look at that.
When we lifted off from the zero lower bound, the median FOMC participant expected 4 rate increases for 2016. But very early
I grabbed
in the year,
I did a straddle on Amazon. I grabbed a $50 put and a $50 call.
Under Janet's leadership,
just because after seeing that first
I would say
candle,
flexibly
there's a lot of
our expected
volume,
rate
but
path.
things are picking up.
We did eventually raise rates a full year later in December 2016.
Dude, BA, wow. Grant, those BA calls, you should have seen how those have been operating. Those were just a mess. So let's see here. The market's kind of 252. It's higher. It's higher than it's been. Remember, we were saying 251, but this is kind of crazy. I think that's why it's so soft. We're not really seeing the buying come in. It's not too convincing. All right, I'm gonna sell the Amazon. It's at 545 now. 550. 580. I sold it for 588. I bought it for 40 cents on there, but that covered even the put. I just want to get rid of stuff expiring today. I want to roll over to the Amazon, maybe another $100 one if it gets cheaper. But I still have a 1600 for today. It's just a graveyard, but I'm down on that. That one's old. All right. So hopefully you saw that, and like I said, it wasn't that exciting. It wasn't exciting as the NVIDIA one, but we still made good money. You could see I sold it, and even through my order history, you could see all within this time frame. What else do I do? I'm starting to cut out calls. Anything that's expiring, I'm selling, but as I'm taking profit on calls before 20 minutes, I'm buying puts. I'm setting up. I bought a put, 30 minutes later, I sold it, and it ripped. I was down. I'm still down on this. And then took my profits, took Apple, took some Facebook puts, or I bought some more Facebook puts, and then I sold this. And I'm going to make another video on this because this is part of this strategy, especially with weeklies that I showed, because I called this one at the beginning of the day, and I did this today too. And this one was $10 to $100. So that even helps supplement some of these plays. But you got to understand this is gambling. That's at the end of the day. I want to make sure you guys, this isn't a real trading strategy. This is just pure fucking gambling. Okay. If you get that, you'll be good because that's what you'll see. That's why I'm selling out how I am and buying how I am. And that Amazon, why I sold out there, the thing with the dailies, you guys got to understand, a lot of people, this is why I say focus on intrinsic value and being in the money, is the daily contract. There's a difference. There's the weekly, which has the 5 days, but then the daily means it expires that day. If you're not in the money, you're screwed, but then you have to factor in what you paid. So mine was a 1585 plus I paid 45 cents. So essentially, by that end of the day, it has to be above 1585.45 or I make zero money. So that's what I'm thinking from. So the minute it was at 1584, it was in the money for a second, and then it was right back there. I sold out because I said, okay, it's at the day. I'm in the money at the money, but there's still, it was what, 1 o'clock, 2, 3, 4, 3 hours left in the market. So even though it was at the money and there's still 3 hours, the $588 was pure premium because the market was saying, okay, then now that it's up here, by the end of the day, the market was thinking it would go $5.88 more. And I think it did, and then it eventually came back. But you see here, it closed at 1579. This contract expired worthless. So if you didn't sell it, it was a finesse. 10 minutes before, I was up 700. I sold it, then it came down, then it was up 800, and then it expired worthless. So you have to understand the volatility, and that's the thing. And the lesson I'm saying with making money fast, what you want to be aiming for, shorter duration contracts, averaging down, and then selling as soon as possible. But now here's the crazy part. All of the stuff I just listed, those are advanced strategies. Averaging down, I'm going to make a video. A lot of you blew up accounts today or over the weekend. A lot of people had trouble with the first bad thing is because it's scaling in, how they average down, or they average down too hard too soon. Averaging down, some of you thought you had it down. You bought one set, then you bought the next one, but then you waited another day and then you bought all of it when you time is slow, So, but that is something you got to think about. However, that's partly why I sold it. I wanted to hold it. I had the other ones, and that's why I started to proceed to sell. I waited. It didn't break at the time. I started to sell anything was at the money, and then I would keep the other ones. Or my plan was wait till Amazon dropped and buy another way further out of the money call, take the $588, put another $50 back into it, $100 just in case. I could leave it there, but I'm not going to sell out at the high and then buy in. I would sell out and wait. And that's how on the short duration contracts, if you let the time space out, you could really get your gains, but that's where you're going to be making money. It's going to be short duration contracts. So as you see here, short duration contracts, news events, or crazy volatility, those are the factors you want to identify now for the fast money. Now, at the same time, it's you could generate the same logic behind this will generate you fast money at any step. That's why I'm bringing this up, because it's not gimmicky for me saying, oh, make fast money just trading short-term options. No, I'm doing it like this so you guys see. Let's take a step back and make it broader. This is just how option contracts work. The shorter duration contracts are going to gain more delta when the stock moves, and they're also going to lose more when the stock doesn't move, and then also the theta. So that's where you see even the next week, and they're also going to be more expensive. So you're going to be taking more risk and not, and I'm thinking about this, and I want to talk about this, and we're going to keep going over this because this has been the dilemma where, I'm asking people, what do you want to accomplish? They say, I want to make a lot of money fast. I'm like, well, that's not going to work, but that's what I want to accomplish. So I can't tell you what you don't want to accomplish. If somebody does want to take that risk, they're ballsy enough, practice, study this and that, but the bigger gains are going to come in mastering the shorter durations on the contracts. But don't believe me saying this is understanding the time and place, and it's more riskier. So you make faster money, but it's harder to do. It's way riskier. The shorter duration contracts, even the ones February and all that, you could wake up randomly and they'll be up down 50%. But these ones are so crazy. And to even be able to say, hey, let me pinpoint a good, it's like, how did you know to sell at 588 instead of 788? I fucking didn't. It's risk reward and understanding the floor is lava, that it could fall through at any moment. So that's why I'm saying it's not a viable strategy for building wealth, but that's where the bigger gains come in. And that's where I think a lot of people have been getting confused, because you'll be buying shorter durations, you'll hit a move, and then you'll roll over to a longer duration, or you'll go next on your next contract. You'll get a longer duration contract. You hit the move, and you're like, I'm only up 30%, but I could have made 3,000%. That's going to be the difference, and it's the short duration contract. But the risk reward trade-off is what you make is based on the risk you're taking. So you see here the same 585 call at the time of 1021, it was $1,500, and it only, I say only, you still made $1,700, but you have to put $1,500 down to only double your money. Whereas that's not the case for the one we played. You go one more week out. Let's see. Similar. This one's a little bit. You only made $1,300 from when you bought it, but then in the same respect, you could have easily lost $1,300 if it came down, because these are weekly. So that's why it's such a dilemma. And then the next part that allowed me to sell off is that I was continuing. Go look at my other play. I did $60 into $1,800 on Amazon. I did that last week, doing the same exact thing as I'm showing you here. But then I rolled over. I took my profits and I rolled over into a $200. I paid $200 for a January 4th at the last week's 1,600 call. And it went up, and I was up on it. And if you remember, I went on my Tastyworks account. I sold it. I made $300 on the premium. I closed out selling it, and I just held that contract. So when my weekly, the 1,585 here, was up, I was saying, okay, my other contract, the 1,600, was down at the open. I already wrote it off. It came back to life. But I said, okay, $40 to 600 here. I'll sell that, and then if I want to hold and think Amazon's going to go up, I'm just going to let the other contract sit there. So that's where you guys will see, that's why I say scaling in and building out some of these shorter duration positions over the week could be beneficial. But now in the same regard, that's how you're going to lose 50% of your account just off of if you're wrong. That's it. If you're wrong on the short duration, you're done. You guys saw me. I did it on stream. I just picked the wrong contract, and I bought 100 contracts of a weekly instead of a monthly. I lost $600 instantly, or $500 instantly. Stupid. So you guys got to understand, this is a strategy that helps, and it works only if it works. If and only if it works. When you try to average down and go about this the wrong way, or playing, not even average down, even short duration contracts, you go buy, like we said, we did it, and I lost the Google on this account that I did, and that's the game. That's what I'm saying. You got to understand the gambling nature of it and what it's like. But that's why I'm being so clear about it with you, because if you're not, and you think you're actually investing when you're going to a roulette table, it's going to screw you. So understand that. So, and it could make you hesitant. I did miss a NVIDIA play the same day, but all in all, hopefully you see what I'm getting at with all this. But be smart with it. Here's the short durations. The main thing here was the news event now, and understanding that catalyst, Fed Powell speak, understanding interpretation, and again, being close to in the money. Look at the price of the stock. If you ever want to go look at 1021 on Friday, what price Amazon was at and go look at a 1585 call. How far was I from the money? You know, how does this compare to the options you guys are buying that are 30% from the strike price, you know, or from the assets price? Think about that and really look and understand the pricing too. And a lot of you are like, I can't find options this cheap. Are you waiting? How I find them every fucking day. So you got to be able to wait and patient. You may not find them at the time you want them, but they exist. So I'll leave that there for you guys. I love you. Subscribe to the channel. I got some cool videos, cool announcements today. So get ready. I love you all. Peace.